So, David, it's good to catch up with you again. Hey, the last time you and I were talking, you mentioned the question of indirect transfers is something that comes up a lot in your discussions. Tell me a bit more about that.
Well, China has this indirect transfer tax rules, which was a bit of a similar to the Wolfgang case in India long time ago. Now, certainly from a tax perspective, if you directly transfer the China entity, there will be a capital gain tax issue in China. Now, however, if you indirect transfer, if the China entity being indirectly transferred, there will also be the tax issue. Yeah. The first regulation was 698, which is quite controversial globally, even with the US IRS. But now the OECD even sort of adopted that position. So the new regulation in China called Announcement 7. Now the situation is, let's say if you're a US multinational company, due to the tax reform in the US, you do the global restructuring. It happened in the past few years. Now, the China was not directly touched because you did the global restructuring, did not restructure China. But in the chain, for example, US, Netherlands, Hong Kong, and China will be indirectly transferred because in the structure, one company ownership being transferred. So China will be indirectly transferred. If China be indirect transferred, then they will fall into the indirect transfer tax law, tax regulation in China, Announcement 7. Announcement 7.
And so what does that mean, David? Does that mean that the entity, that the gain then becomes taxable?
Yeah, exactly. If you did not satisfy certain conditions, particularly if the transfer did not meet genuine business purpose, then the gain in China will be taxable. In other words, it will be considered as a direct transfer of China ownership. Although it's indirect transfer, it will be considered direct transfer of China ownership. So the gain in China will be taxed in China. 10% withholding tax on the gain. The gain is basically calculated your current value, current fair market value, minus the original investment cost. The original investment cost is the original capital you put into China. If you've been to China for 20 years, that cost is very little, but your current market value can be huge, right? So
right.
10% of that will be the tax, withholding tax. So it can be potentially huge amount of money you have to pay in China, although you did not transfer your China entity's ownership directly. So that, to some company, that could be quite critical and some heavy potential tax being assessed by the China tax authority. So if you look at the tax regulation, again, we can spend lots of time on the regulation, but I'm not going to spend on lots of detail on the regulation. There are safe harbor rules, for example, right? If you satisfy, you're not really fall into this tax regulations. Even you might fall into tax regulation. You have the 7 tests. 7 tests you have to go through to see whether you meet the general business purpose or not. You have a business reason to do this or not. 7 tests, et cetera, et cetera. So we're not going to go through that all those details. Now the issue is again become a practical. First of all, based on the regulation, you look at the 2 reportings. If you have a tax liability, you do the tax filing. So that's the tax reporting. Now, another reporting is called Announcement 7 reporting. What Announcement 7 reporting means is that you had this indirect transfer transaction happen outside of China. But you have to report certain document to the Chinese tax authorities, right? Such as the contract, such as how the global structure looked like, which is not directly related to China. But you have to report that to the Chinese tax authority. So are you going to report or not? Because based on the regulation, the report is a volunteer reporting, not a tax filing. The reporting is a volunteer report. So then it will say, if this is volunteer, I'm not going to report it, right? Why? If this is volunteer report. Now the issue is, if you don't do the reporting, if you are the buyer, then you're not going to get a tax step up. Your tax base in China will be the original investment amount, which can be very little. They're not going to get a tax step up. But for the seller, they said that I did the analysis. I feel the risk is low. Why do I want to report? If I do the report, I might just be taxed, right? If I don't do the report, I might be in the gray area. So why do I do the report? So if you are the buyer, if you are the seller, the position will be different.
So that's fascinating, David, because first of all, it's just a plain trap for the unwary just generally. But your point that you just made about the potential significance of it in an M&A deal and how buyers and sellers might have conflicting views, that's really interesting and certainly something that people should be taking into account as they're thinking about M&A transactions.
Yeah. Another tricky in China, which is very different from US, is that there's no advanced ruling mechanism in China, except the APA for transfer pricing purpose. So you can't go to the tax bureau and say, well, I need your advanced ruling because the amount involved is so huge. Can you give me a ruling? Should I do this transaction or not? There's no such advanced ruling mechanism in China. So you can't expect the tax bureau to give you a ruling or assessment before the transaction taking place.
Interesting. So you really are on your own. You just have to make the decision.
Right. Exactly. So you have to do your own risk assessment.
Yep.
Yeah, once you've done your own risk assessment based on the 7 tests, then you have to determine, should I do the volunteer filing or not? Right? What happens if there's a 50% chance, right? If it's a 20-80, I just don't do it. If 80-20, maybe I'll do it. But what happens 50-50 or 60-40?
Yeah,
right?
yeah.
So those are the tricky questions. Yeah.
So that's fascinating, David, because certainly it's true that many businesses are reorganizing and simplifying their legal entity structure today, given what's happened over the last year, right? They've had to do it.
Yep.
But I never really thought about it in the context of M&A as well, and how that might be yet another conflict for buyers and sellers to manage. That is just fascinating. And I have to believe with all the activity that's going on now in the capital markets, it's keeping you super busy.
Yeah.
Well,
so each case, it just says its own merits. You can't use a standard fix and read the article and say, this is what should we do? No. Now in China, certainty is difficult to achieve.
Well,
Rodney, you're head of international tax. I think you know China very well. That's the difficult part, which is very different from US.
Yes, it's different for sure. Well, look, David, thank you very much for your time. That is a fascinating topic and a fascinating different look at it that I'm not sure a lot of people think about. So thank you for your time.
Thank you.